Discovery, you're listening to the Market Update with Money. We're brought to you by the Right Choice Investment from Discovery Invest.
MoneyWeb on SAFM, South Africa's news and information leader.
And today's top story is brought to you by SAA Voyager Credit Card. Miles, more rewards. And we're chatting infrastructure spend and more particularly the results at PPC and at Stefanuti stocks. If we start with John Gomersall, the CEO at PPC. John, interesting to see that regional cement sales down after 7 years of strong growth. Are you concerned at all about this, or are you a bit relieved given that you've been at such high capacity over the last couple of months?
I think it's a bit of both, Geoff. Particularly the old production lines that we started up, they've been running flat out for 4 or 5 years, and they need a bit of a break, and so do our people, as a matter of fact. So we're pleased that the big new production line's coming on stream. It's got to shut down for nuts and bolts being tightened, but it performed exceptionally well. It achieved warranted production rates inside the first 30 days of operation.
No, this is doable.
Yeah, which is, it's unheard of with a 1.4 billion plant as complex as that. So we've got high hopes for its performance in the year ahead, and we're able to rest some of the old stuff and get it up to scratch.
What sort of cushion will that give you in terms of capacity?
Well, if you take the market's running at about 15 million tonnes, but in this last year the industry imported about 1 million tonnes, so there's a bit of slack there that we can help take up. So even if it's a flat market or slightly down, there's still an opportunity. We can go back into Mozambique. We've been supplying it from Schubuild manufactured in China for a couple of years now. So there are quite a few options open to us, even if there is a bit of softness. There have been predictions of the residential market collapsing, but I think it's pretty tough out there already. There have been some companies going into liquidation, small ready-mix companies, brick manufacturers, even developers. So if you look at the statistics, the formal residential market actually started slowing down from the beginning of 2007 into 2006. So, and the infrastructure side is looking very strong. There's a huge amount of work in the pipeline. Medupi Power Station have now established their batch mixing plant. Our people were told it was the largest batch mixing plant in the southern hemisphere, but I'm not sure if that's true. But that's starting to take cement now. And Kusile Power Station, the earthworks and ground preparation works are in process. And then I don't know whether you're going to be doing the piling, but there's a lot of piling's got to be done there, I believe. So that'll be starting soon.
Well, we're going to be chatting to Willie Mayberg in just a second. But, John, just coming back to the costs now, and particularly in terms of if you're going to supply some of the stuff that people are importing at the moment, what sort of changes in pricing would that bring? And are we expecting higher price increases given the costs that we've seen coming into the industry?
Well, we stopped importing bagged cement with effect from virtually January this year because it just got too expensive. Currently at the coast, imported cement would probably land about 20 to 30% above the ruling South African prices. I think we've fallen a little bit behind in terms of what's happened to world prices too, because there's been this huge bubble in the crude oil, and it's come down somewhat, but we haven't seen it at the pumps yet. And that's what we experienced in the fourth quarter. Our fourth quarter cement delivery costs on a rand per tonne basis were 35% up on the same quarter last year because of the diesel prices. And we've seen coal price increases of 40% at a time. Our lime business, which uses low ash and low sulfur coal, had an 80% increase in April last year and an 80% increase in the coal price on top of that again this year. So some huge energy increases coming through. Electricity as well, of course, with the double increase this year.
Willie Mayberg is in the studio as well. He's the head of Stefanuti stocks. Have you seen a similar sort of increase in costs?
We have increased cost in various products in reinforcing steel, brickwork, bricks, and the supply of materials. Yes, we have seen increase in prices.
John, if we come back to you now in terms of the BEE deal, it seems like it's been approved. It is going ahead. You've also got a new chairman as of Monday. How did you find Becky Spire?
It was a long process. We had made up our mind we wanted a black chairman, and that was not gender specific, I might add, chairperson. And it was about a 6-month search, very carefully using executive placement agency advisors, and the board chairman selection committee that looked at both internal possibilities, existing directors and new candidates. But a very nice man, Becky, and I think he'll do us proud.
David, what did you think of the results?
You don't give me much choice with John sitting on there.
Well, there is somebody between the two of you.
I was saying before, we've been recommending this for some time. First of all, very good result. Just understand, under the circumstances, I think they did exceptionally well. I think ahead of where the market was expecting. High interest cover. The interest is covered 15 times, even though debt went up a little bit, but also their dividend is exceptional. You're buying a share now on a 7.8 dividend yield, which looks at the moment sustainable. So I think as a defensive share in this kind of market, and listening to what John says, to me it still remains one that you can look at. No one wants to say buy in these kind of markets, but
well, you never know where it's going to be tomorrow.
But with a BE deal also approved now, they will buy back 7% of your shares at over 30 Rand. I think at 31 Rand. So there's a nice little twist there, arbitrage.
John, are you positive about the next 12 to 18 to actually post 2010? Is there still legs in this construction boom?
2010 was hyped in the media tremendously, and you will recall us coming out and saying, listen, you need to understand the 10 stadia are only going to consume 325,000 tons of cement. It's a lot of concrete, but it's not a lot of cement. And not looking a gift horse in the mouth. I mean, 325,000 tons, but put it into perspective of a market of 15 million tons and spread it over 3 years, 100,000 tons a year. The World Cup has been overplayed as its impact. There's a lot of activity, but the civil work and the concreting work in a lot of the stadiums is actually not far from coming to an end now, and it's moving to the next phase of the steel roofs and the rest of the infrastructure.
And that's where Willie Mayberg comes in. We're going to get his view just after this. Today's top story was brought to you by SAA Voyager Credit Card. Miles, more rewards.